Hey guys, what's up? Hitori here. Welcome to another episode of the weekly market outlook with Trax Prop. Currently, we are at episode 47, so just 3 shy of episode 50. And I thought, you know what? This is the first time I have my camera on, so we would just have Mr. Cat right here, right, with us for the outlook. I'll pretty much just place her right here, and we are going to get straight into the video. So right here at the end of, technically now when this video comes out, this will be the start of June, so we are finally in the second half of the year, which is crazy quick. You know, I do still remember that it just felt like we were just in January and we just started a new year, but nope, it is now pretty much, you know, quarter 3 of the year. Crazy scary, right? Almost quarter 3. So with that in mind, let me just get straight into the video. So here we have the S&P 500, but before that, let me just do a quick recap here. Let me just move my camera of this week's, technically last week's data release, right? So we had a pretty lackluster Monday with GBP and USD both on bank holiday, and then we didn't really have any major news release until Thursday, where we had GDP for USD as well as the FOMC minutes. But overall, you know, normally towards the end of the month, there really isn't any substantial news releases, right? It's pretty much finished on like week 3, so week 4 is kind of wonky most times. But hey, the volume, you know, for the past few months, ever since Trump has been in office, has been crazy. You know, normally week 4 of the markets can be quite boring, but that wasn't the case with Trump. So really happy to see that volatility coming into the markets once again. Kind of like pre-2016 vibes right there. But next week, right here, first week of June, remember we have the big bad NFP report and also just a bunch of different news releases, right? On Monday we have PMI for the US dollar. Tuesday we have jobs opening. Wednesday we have PMI again for services as well as ADP. Thursday we have unemployment claims, and also the ECB is having a press conference along with its main refinancing rate for the euro. So really just an overall crazy time to be in the markets next week. First week is always the most volatile, I'd say, so you always keep your risk in check and keep your account in check, okay? But that's pretty much it for next week's calendar. Coming back here on the charts, let's take a look at some data, right? So currently, at least for the US indices, econ data is showing, yes, a bullish outlook, right? We're seeing US GDP beat expectations, PMIs and also retail sales were really strong, and we also did see inflation cool to around 2.3% for CPI, as well as 2.4% for PPI. So as of now, at least, the US economy appears to be pretty stable, right? So when the economy is stable, indices tend to slowly thread upwards. It's not going to be like a crazy move like bam, 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 right? But it tends to slowly thread upwards, making steady higher lows and higher highs. So with that in mind, you know, looking at the S&P right here, I think that we are on the track to retest all-time highs right here, right? Like the S&P. Currently, we are trading within this range. We are trading above the 200 EMA. We broke above it, tried to retest it, closed beneath, but then immediately just pumped back up during the middle of May in the previous month. So with that in mind, I do think that we could see some support being formed around here, taking out these all-time highs, taking out this high, and then potentially coming to retest the all-time highs around the 6K mark for the S&P 500. Now, it would be, of course, best to get on side with this bullish bias if the market were to do something like this, like a pullback. We could then look for longs from the 5.5 to 5.7 mark K mark here on the ON price feed. So technically, for some of you swing traders, you could in theory do something like this. The risk reward is still pretty neat, 2.5 at the opening of each. If you wanted to refine this level of support, you could also do something like that. Brings the RR up to 4.7. It also coincides pretty nicely with the 200 EMA. If we were to do a retest, pullback, correcting some of this crazy move, sorry, not this crazy move, but this range right here, and seeing a move higher. Also, you could even target all-time highs right here for a 5-hour trade. So this is looking like a good trade for a maybe 2 to 5 hour trade right here. Stop loss just beneath this level. Of course, this is not like a signal or anything. This is purely for educational purposes only. We don't give signals here at TradeXprop. Okay, so take care of that. Okay, so climate is pretty much still bullish as well. Looking beneath this this indicator down here, climate is bullish, so it's good for longs. When we come back down to retest, it could show a different story though, so that's something you might want to look at. Coming into the Dow Jones right here, we are also trading above and retesting the 200 EMA, slightly further away, closer to the EMA compared to the S&P 500. Only issue is that there isn't really a support right here on the ON price feed. There's no printed daily support that's present, so you might have to go down to like the 4-hour chart, for example, and then look for potential long opportunities, you know, perhaps from this level right here. Maybe have your stops, you know, beneath this this swing point right here, targeting all-time highs. Right, this would be a pretty nice RR trade as well. Or you could choose to just not take a look at the Dow Jones. You could go straight into the Nasdaq right here, because all the indices are pretty much under the same fundamental and sentiment bias, right? There really isn't anything kind of differing from them. They're pretty much the same, right? Nasdaq right here, where it's a tech-heavy stock, index is pretty much retesting at this point, almost retesting this 21K mark, 222K mark right here, potentially coming up into this area to see either a break, and then we could do like a break and retest, or a break, come back down below, taking out some of the liquidity, as you could call it, and then coming back further down, taking out this low to this support. That also coincides with this 200 EMA for a bounce higher, right? Either way, I'm looking for a bounce higher on US indices like the S&P 500, the Nasdaq, the Dow Jones. I'm still pretty much bullish on all of them because of the econ data, as well as there just really isn't like a crazy catalyst for bearishness coming in, right? Like I know we did see Trump pretty much saying that China, you know, broke its negotiations and what they were supposed to do, but I don't think that as of now, that unless we see some official comments from both parties, that's probably not going to have any effects on the markets as of now, right? So definitely still bullish on these indices. Okay, so taking a look at the US dollar right here. Last week I did mention that this is last week, right? I did mention that we could see price come up, retest this area as resistance, and then bounce lower, which is what we pretty much did on Thursday of last week, towards the end of the week. So right now, the dollar isn't really going anywhere, right? It's not really showing me any clear pictures. It's pretty much mixed, right? Yes, we do see cooling inflation, which is a good positive. Labor data is solid, with unemployment at 4.2%, which is technically below historical averages, right? Recent NFP reports, they did exceed forecasts, and job openings are normalizing to pre-pandemic levels, but unemployment claims, based on the recent data, it did tick up to around the 240K mark, right? So it's not really doing anything right now. I think we have to wait for next week's, or technically this week's NFP report to kind of showcase us what the latest data is looking like, because I think right now we are just priced in for that move between this swing low and this swing high, and we're just trading beneath that, pretty much in like no man's land, right? So there really isn't any conviction for the US dollar just yet. We're just taking our sweet time, trading in between these areas of support and resistances, right? So looking at this, if we were to break beneath this area of support, breaking beneath the swing low, the next two areas of obvious supports are $95 mark to $97 mark. We could see price thread lower, and we could find some support from here, back up to retest the 100 mark right here, right? So we could see that happen, but if you were to break higher off of this level into the swing high, we could come into the 101 mark to 104 mark right here to retest these areas of resistances, right? Of course, like I said, these moves are probably our best bets next week if they do happen. I'm pretty much expecting neutrality for the coming week until NFP drops. So be prepared for price to trade between this range of 97 to 101. I don't think we're going to exceed this range by too much if we even do that. We could even just be trading within this choppy smaller range right here, unless something crazy happens during the week that isn't accounted for, right? So pretty much just shopping in no man's land for the dollar right here, showing mixed signals, right? So coming into everyone's favorite pair, the account blower, as I like to call it, we have gold. Okay, so gold is also in no man's land. It's pretty choppy. It's not really going anywhere as of now. We're just trading between this swing high. Let me just hide this. Oh, let me just hide this. Swing high, swing low, and we're trading really choppy, right? No crazy movements going up or down. Okay, at the moment, this is pretty much reflecting just overall uncertainty, as well as just traders not knowing where to go around the tariffs and mixed US data releases, right? Inflation is cooling though, like we kind of went through previously, so that does kind of reduce pressure for rate cuts, while the excuse me, just had a crazy dinner, but we also did see strong labor data, stats temper recession fears, which is both pretty much just showing a neutral case for gold, right? But I don't think that gold as of now is pretty much being affected by the econ data that much. I think that it's been on a crazy run, right? For like a really long time, it's been on a crazy run, and I think that right now what's causing gold to chop is that there just isn't any fresh catalyst, right? Like we're not seeing any new wars. Most of the war fears have priced in. So unless we see some escalations from the trade war, we see some escalations from real war, like maybe Russia versus Ukraine. We have some new escalations, or maybe something out of the blue, like India v Pakistan. I think that we are not going to see gold trend crazy in either direction until then, right? Because we have trended so much, right? And the gains that we might see in the coming weeks or months are likely to be muted unless we get some fresh catalyst, right? Now, I don't think anyone out there, including myself, wants a war to happen. This isn't a channel for politics, I'm just stating that if we don't have any catalysts, we probably won't be seeing trending moves too much on gold, right? If we don't see any new catalysts and then the US data is coming out stronger, we could in fact see gold start to correct downwards, clearing out some of these lows into these areas of supports, maybe even retesting the 200 EMA to kind of wipe out or correct some of its gains that it's made this start of the year, right? The all-time highs currently is around 3.5k, which is crazy. So we definitely could see that come into play if we don't see any new fresh catalysts pushing the markets higher. All right. Okay. So coming into some of the forex pairs, actually let's take a look at silver right now. All right. So silver is also not going anywhere. pretty much muted gains as well. We have this large area of structure point kind of pushing price lower, but really we are just caught within this recent range from this swing high to this swing low, and we're chopping in between. We are trending very heavily above the 200 EMA, but like I said, we just caught in ranges within ranges right now with no fresh catalyst, right? But if we do see some fresh catalyst and gold does move, I want you all to kind of take a look at silver, because sometimes, actually not sometimes, but many times, silver actually moves a lot more than gold in terms of a percentage basis, right? When it trends, it outperforms gold quite often. Okay, so if something happens, I want to see a pullback lower to the 200 EMA, retest this area of support around the $31 to $28 mark. Obviously not too far beneath it, because that would defeat the purpose of retesting the EMA, but just like a retest lower into some support and then push higher to retest these highs, and potentially coming back into some of these highs right here for silver. Okay, so that's why I'm taking a look at silver. But going back to the forex pairs right here, remember the DXY is not going anywhere. Just to recap, it's expected to chop next week. But taking a look at GBPUSD right here, we have come into these highs right here and some structure around here, and then we have formed a new area of resistance. So we could see price retest this and then push lower into this area of support before going higher, right? Because the UK econ data, it does look pretty strong, right? We see inflation higher than expected, alongside solid retail sales, services PMIs, and also GDP growth, which bolsters the Great Britain pound, right? So with that in mind, I am bullish on the pound. I would like to see some pullbacks forming this range. Maybe if we draw like a swing from the swing high to the swing low right here, we could come into some of the pricings right beneath here, and then push from this support, or maybe some 4-hour support, for example, pushing higher from there, right? So definitely expecting a bullish pullback into a bullish continuation move for the pound, going into the euro right here, which is also pretty much the how do I say this? The pound is strong right now, right? You take a look at the euro, even though it looks like it's trending higher, it is actually performing it's underperforming, right? It's pretty much underperforming compared to the pound, which makes things like EURGBP right here, which makes EURGBP attractive on the short side, right? So take a look at the euro dollar right here. Yes, we are also pretty much caught in that same range, right? That this move right here, we are caught within this range. So until NFP drops, I'm also personally not expecting any movements, coming into the markets next week, which is too crazy. But if you want to consider positions, right, you could take a look at the euro pound. What this means is that we are going to be threading lower and lower steadily, crashing off these supports, possibly retesting them as structure, back down into lower supports. But of course, if you want to enter these kind of trades, you might want to consider smaller positions, right? Or especially when you're trading pairs which are a lot more volatile, like the EURNZD, you might want to consider smaller positions, because it looks choppy right now, because everything forex is pretty much choppy. But take a look at the peaks. When it trends, it has a pullback, and then it trends, pullback, trends, pullback. It looks choppy currently, but if it goes, trust me, it goes. All right, kind of like gold. When you're trading these pairs that are not USD based major pairs, right? So yep, that's it for pretty much it for the forex pairs. Not much to look at really, apart from because when everything so when the USD is choppy, everything else is pretty much also going to be in some form of chop. The USD currently, and has been for a long time, pretty much like a leading pair, right? It's pretty much the leader and it's always in focus, right? Comparatively to things like the New Zealand dollar, for example, the Kiwi dollar, whatever. It's pretty much just not moving, right? So the USD is chopping. You might want to take your focus onto other asset classes like gold, maybe even crude oil, which I'm going to get into right now. So here at crude oil, it's funny that I bring this up as an example because it's also pretty much chopping around. I did want to see a break above this resistance right here to then hold to take price higher, but it didn't happen and we're just chopping, right? It is pretty much in a conservative downtrend for the past recent years, right? I am still personally eyeing a breakout above here, which is the $64 mark for potential buy based off momentum trading up into the 200 EMA or this area of resistance, which is the nearest one currently. But at the moment, I don't have any conviction or confirmation that it's gonna go higher until we see a strong breakout above here, and hopefully the candlestick doesn't close too crazily, and it allows me to get back on that dip. But if it just goes, you could consider like a buy stop trade right here once it closes with a convincing bullish candle above the $64 mark, right? Taking a look at Bitcoin as well. We just made all-time highs. We just pretty much broke through this level, and now we're making all-time highs around here. 112, right? 112. So Bitcoin currently, it did surprise me, like I mentioned in the past few outlooks as well. This bullish run has surprised me, right? Pullbacks currently, they are brief in these strong moves. They don't really pause too quick. When you take a look at this risk off currencies, especially with something as volatile as Bitcoin, pullbacks, they are brief. When the momentum is strong, it doesn't have steep pullbacks. It has really shallow ones and then a continuation run higher. Okay, so right now, based on where it's priced at, longs might be doable, especially when you come into areas of support right around here, the 102k mark. We also have this area of support down here by the AutoUFOs. We could see price come down into these levels, retest some of the liquidity around this area, and then push higher from here, right? A push to 140 to 150, it definitely could happen if tariff fears ease and the Trump administration focuses on low taxes and deregulation. That is going to definitely push the price of crypto and Bitcoin higher, right? So until then, I think potential small longs, if you are in any, or if you're looking to get into trades for Bitcoin, longs are definitely on play right here. There's nothing that's shifting the sentiment bearish. There's nothing that's currently at least showcasing to us that people are going to be on a risk-off scenario. We're seeing strong US econ data. We have NFP report coming next week. There are no any fresh tariff fears, nor any trade war, nor any war-based fears. So until those things happen, you could say that you are pretty much bullish on crypto. Yeah, for sure. So yeah, I think that's pretty much it for the outlook. I think I pretty much covered a bunch of different things. So yeah, take care, guys. We have NFP next week coming into the second half of the year. So that just pretty much, that's like a wake-up call, right? Because I swear it just felt like yesterday was New Year's, and now it is 6 months have passed, right? Times that of like 3 days, 280 days has passed. Sorry, 180 days have passed. I don't know why I said 280, but 180 days have passed. So that is something that should scare you. If it does, it's good, because if you haven't done much with the time that you've spent this year just yet, I think it's time to get started, right? The best time is, the best time is always like yesterday or 20 years ago, right? Or whatever in the past. But the second best time is always to start right now. So get your feet off the ground, get started on your goals, your checklist, your to-do list, get them started, and then start to tick off some boxes once you have completed them, right? But until then, take care, stay safe. I will talk to you guys next week. Bye bye.